When it comes to building a solid financial future, home equity is the single largest contributor to household wealth in the United States. In fact, U.S. homeowners held a collective $16 trillion in home equity at the end of 2023, and with home values continuing to rise, that number is projected to steadily increase. But if you're new to real estate or just about to buy your first home, you might be asking, what exactly is home equity and why should I care about it? Well, lucky for you, you came to the right place, so let's break it down. Home equity is essentially the difference between what your home is currently worth and what you owe on your mortgage. So for example, if your home is worth $200,000 but you only owe $150,000 on your mortgage, then you have $50,000 in equity. Now your home's equity can increase in two main ways: paying down your mortgage and your home's value going up. But remember, it can also decrease if your home's value drops faster than you're paying off your mortgage. Take this scenario for example. Let's say you buy a house for $200,000 with a 10% down payment. That means you put down $20,000 and take out a mortgage for $180,000. So initially you have that $20,000 in equity. But fast forward 2 years, you've paid down your mortgage to $170,000 and your home's value has increased to $210,000. Now, just 2 years later, you have $40,000 in equity. So in order to calculate your equity, you need to know your home's current market value. So you can pay to get an appraisal or check comparable home sales in your area for a rough estimate. But remember, these estimates aren't always spot on, so don't be shocked if things change a little by the time you decide to sell or borrow against the value in your home. Now, building equity in your home is definitely a process that benefits from the passage of time, but there are a few things that you can do if you're looking to speed up the process. Here are a few tips. Make a big down payment. The more you put down initially, the more equity you start with. Pay off your mortgage. Focus on aggressively paying down your principal balance. Pay more than the minimum. Extra mortgage payments can significantly reduce your principal balance over time. Stay in your home longer. Home values tend to increase over time, so the longer you stay in your home, the more valuable it'll likely become. Renovate. Making improvements to your home can dramatically improve your home's market value. Now, simply having home equity is great for your net worth calculation, but actually using it for your financial benefit is even better. Accessing the equity in your home can help you with many important financial moves that you might want to make, like buying a new home, consolidating other debt, or even funding a comfortable retirement. But what if you don't want to sell your home in order to access that equity? Well, the good news is you don't have to. You can borrow against the equity in your home and then use that cash for important things in your life. There are three main ways for you to borrow against your home's equity. Cash out refinance, which is where you refinance your current mortgage for more than you owe, and then you take out the extra cash. Home equity loan. This is like a second mortgage where you get a big lump sum and then you repay it over time. And a HELOC, which stands for Home Equity Line of Credit, which works like a credit card with a limit based on the equity in your home. One of the biggest reasons why these financing options can be such powerful financial tools is that the interest rates offered on these loans are typically lower than personal loans and significantly lower than credit cards because these loans are secured by the value in your home. However, with great power comes great responsibility. So before you execute on any of these options, you'll want to be sure that you're borrowing for the right reasons and that the resulting loan payments will fit within your budget. When you're ready to determine which one of these financing options might work best for you, Quicken Loans is a great place to start. Quicken Loans curates financing options from some of the country's top financial providers. See, when you're good with your money, you give yourself more options in your life. And effectively building and using the equity in your home is one way that you can be financially savvy.